Greetings to those who are connected with my channel and greetings to those who are using infotaxsquare.com for years and years for their business needs. My today's topic is about what is the standard deduction allowed for a dependent who only earns unearned income. What is the unearned income? It is not a regular income, rather it is an investment income or a passive income such as interest, dividend or the investments. And what are the standard deductions? The Internal Revenue Service allows every taxpayer certain amount to reduce based on their filing status to reduce their tax bill or the taxable income. I'm going to describe it with a case study shortly. This is Nashima, the CEO of InfoTaxSquare.com. We are a team of CPAs and EAs. I request attorneys, tax preparers, taxpayers, entrepreneurs, students, economists, and the most important politicians who create laws to subscribe to my channel to receive the most up-to-date and accurate tax information to enhance their knowledge. Christopher, who is 11 years old and not yet independent, earns $2,000 in unearned income from a trust established by his parent. What is the standard deduction amount that Christopher can claim? So Christopher, who is a dependent of someone, 11 years old, and he earned unearned income from a trust funds established by his parents. So we are going to find out how much standard deduction he can claim. So let's just first analyze the IRS standard deduction table, and based on that one we will analyze how much you can take the standard deduction. Standard deduction for single or married filing separately is $14,600. For married filing jointly, $29,200. Head of household, $21,900. For the 2024 tax year, the additional standard deduction for individual aged 65 and older is $1,950 for single filer and head of household, and $1,550 for each qualifying spouse if married filing jointly. And there is another additional standard deduction in addition to the regular deduction. For 2024 tax year, the additional standard deduction for additional who is blind, $1,950 for single filers and head of household, $1,500 for each qualifying spouse if married filing jointly. For a taxpayer who is dependent of another taxpayer, the standard deduction is limited to the greater of $1,300 or earned income plus $450, but not to exceed the standard deduction amount for single filing status. So in Christopher case, Christopher's standard deduction is $1,300 because there is no earned income. So Christopher's standard deduction is $1,300 because he is a dependent with unearned income and no earned income. So the conclusion, thus Christopher is allowed to apply standard deduction limited to $1,300. Thank you and God bless you.